Hi, everyone. I'm John Ma. I'm a director with First Sentier Investors based in New York. First Sentier Investors, formerly known as First State Investments. I head up our direct infrastructure investment team in North America. Well, global energy demand has certainly been negatively impacted by the pandemic. You're seeing global energy demand decline really across the board. Now, I would say that for ourselves as long-term infrastructure investors, we're focused more on the contracted and regulated end of energy-related infrastructure. So as investors, we're much less directly impacted by this. But when you look across the sectors and some of the upstream sectors, certainly oil and gas and some of the traditional energy mix has been negatively impacted. There's been more volatility, fewer people getting in cars, fewer people flying, with the one exception being renewable energy, which has actually seen a bit of an uptick over the course of the pandemic. I think it has in part, and renewable energy has had strong tailwinds behind it, really strong policy support even prior to this crisis. And we're seeing through the crisis that some of those same policy support measures have continued, and renewables, again, continue to enjoy tailwinds, if you will, despite the crisis and despite lowered overall energy demand. Renewables have increased share both on a percentage basis and in absolute terms. Well, the COVID crisis is certainly unprecedented. I know a lot of people say that, but when we look back in terms of our, as a firm, investing experience, you know, we've been through 9/11, we've been through SARS, and COVID is certainly deeper and more severe. It's a global public health crisis. But in terms from an investing perspective, I guess one other reference point would be the global financial crisis of 2007 and 2008. And in that respect, there's a lot of differences in that currently the global banking and financial markets remain relatively healthy. Banks have continued to lend, there's a lot of liquidity, and so the markets continue to function well, which you can't say is the case back in 2007 and 2008. So from an long-term infrastructure investors standpoint, we're able to continue with our business and seeing lots of interesting opportunity in the market right now, despite the crisis. So in that sense, it's quite different. Well, the November election, hard to predict. But what I like to point out is that, at least in the United States, a lot of infrastructure assets are really within state and municipal control. And federal policy, while extremely important, really is an indirect, I think, in most cases, influencer of infrastructure assets and operations, and in terms of leading to private investment opportunities and private investment into infrastructure in the US. So I think regardless of the outcome of the federal elections in November, I think a lot of the action will be, again, at the state and municipal and local level. And one thing that shouldn't be overlooked in the COVID crisis is the financial crisis that I think is being exacerbated at the state and local level in terms of budgets and their ability to continue to invest in infrastructure assets on their own. So they may look to private investment as a part of the solution. Now, you asked specifically about renewables. I do think that in a Biden administration, just because it's been such a prominent part of his policy platform, I think there will be further boost to renewables if he were to win, and if Democrats controlled Congress. But even in a Republican or Trump administration, I think infrastructure has been one of those areas in which historically there's been strong bipartisan support, particularly in the midst of this economic crisis sparked by COVID. I think people are eager to see people get back to work and job creation. So the stimulus related to infrastructure is, I think, likely post-election season. But certainly renewables would benefit from a Biden administration. energy transition was obviously underway pre-COVID, but I think as we talked about, the COVID pandemic has accelerated some of those trends. So it's been a challenging environment to navigate, but I think for investors with a long-term view, looking for stable assets, there are opportunities out there. And so markets are active and open. And so we continue to evaluate opportunities. We've got a pretty robust pipeline and continuing to look at opportunities.